Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Time to check out a couple of more aggressive growth stocks now. And that's with Bill Wilton. He's our aggressive growth stock analyst at Zacks.com. And one of the ones you brought with you here is in that educational space, Lincoln Educational Services. We've never talked about this one.
No, we've talked about DeVry and I believe Corinthian colleges as well. It's just a very hot sector. Adult education is very big now as unemployment rises. These stocks generally see a nice bump in new enrollments. Lincoln in particular had 42% more new students in the last quarter than the year prior, which is obviously phenomenal growth, which led to a record high revenue of almost $120 million for the quarter, which is up 41% on a year-over-year basis. They're also released more bullish guidance. They're expecting about 60% growth in earnings per share throughout this year. So obviously, being in a hot sector, a lot of people going back to school, things are going very well. As you can see here, they've got a Zacks rank of a number 1. They've also got a buy recommendation from our analysts. And you can see that they're the 8th industry out of the 217 that we break down based on the S&P 500. So that's one of the best ways to get excess returns. Find solid companies in hot sectors, and you're going to do all right for yourself. Here I put together a 6-month comparison chart versus the market as a whole. I use the S&P 500. That's that line toward the bottom. You can see it's up about 10% over the past 6 months, whereas Lincoln is drastically outperforming it, up almost 50% over that period of time.
All right, and then you also are talking about TNS Incorporated. TNS is the ticker symbol. They are in the data communication business?
Correct, specifically for card-based transactions. So what they do is they facilitate the data communications between credit card companies, retailers, banks, and any other type of business transactions that have a financial backing to it. They're in over 28 countries, so they have a footprint that's worldwide, which is obviously important in volatile times. They just released their first quarter earnings report in May 5th. Earnings per share were 29 cents, which easily surpassed the estimate of 17 cents. Their revenues actually went down slightly, but this was their 5th consecutive surprise, which brings me to an important point. A lot of people think of aggressive growth stocks as year-over-year growth is going to be a huge number, but one of the other factors that you have to look at is earnings momentum. So you can still have an aggressive growth company that's growing their earnings per share during the current time. So the estimates are climbing at a rapid rate, not necessarily on a year-over-year basis. And here you can see that they are actually expected to decline. But, like I said, the estimates are going up, which is a very bullish sign for this company. And if that continues, they're obviously going to be growing year-over-year before you know it. They do have a fairly narrow trading range, which can be nice if you can get them toward the bottom of the trading range. You're going to provide yourself with a little bit of stability, which is hard to find these days. And likely they're probably going to stay within this range until their next earnings announcement, which is about 2 months away.
And do you own either of these two?
I do not.
Bill has written about some other aggressive growth stocks that he wants you to know more about, too. So if you go to Zacks.com's homepage and you look in the upper right-hand corner of that homepage, that's where we keep all of the Zacks Rank Buy stocks listed by category. And there's a headline right next to the aggressive growth category. Click on it. It'll take you to the most recent stock Bill is writing about, and then at the bottom of that page, an archive of some others. With Bill Wilton, I'm Terry Ruffalo.